Hello and welcome to the Mehmi Group podcast. I'm your host Haider Malik, and today we're diving into scaling your fleet and financing multiple trucks for growth. Expanding from one owner operator rig to a thriving small fleet unlocks new revenue streams but adds complexity in financing, insurance, maintenance, and operations. The first step is defining your growth strategy. Are you adding identical new model tractors to maintain uniform maintenance schedules or mixing late model used rigs to manage capital outlay? Either way, you'll structure financing across multiple units to balance cash flow, equity buildup, and risk diversification. When financing several trucks, lenders will look at your aggregate debt service coverage ratio, cash reserves, and credit profile. So start by consolidating your business finances into a dedicated commercial account and separating personal liabilities. You'll likely use a combination of equipment loans and operating leases to stagger maturities and payments. Equipment loans across 3 to 7 years help you build fleet equity, while leases over 2 to 5 years lower monthly obligations and simplify upgrades. Consider laddering your loan and lease terms so that not all trucks mature at once, thereby smoothing cash flow peaks and valleys. Down payments on a multi unit deal can often be negotiated down per unit when you bundle 3 or more trucks. Underwriting benefits from scale, so leverage your volume to secure preferred rates and terms across your lender network. You may even qualify for fleet discounts on interest rates with captive OEM financing programs. For credit, you want a strong business credit score above 700 and personal scores above 650 if you provide guarantees. For larger deals, consider adding a guarantor or securing additional collateral accounts, receivable, or property to bolster your application. Interest rates for fleet deals typically mirror single unit rates, 6 to 12% APR, but you may unlock lower tiers at scale due to reduced risk per lender. Relationship lending and repeat business often yield improved pricing. Overhead insurance premiums can be pooled across the fleet to secure multi unit discounts of 5 to 10%. Keep safety records pristine and leverage telematics data to demonstrate lower risk to underwriters. Budget maintenance centrally by partnering with a regional service provider who offers fleet maintenance plans at bulk rates. Set aside a maintenance reserve equal to $1,000 to $1,500 per truck per month. Adjust for age and mileage. Use preventive maintenance schedules to minimize costly breakdowns and downtime. Key to smooth operations is streamlining application processes. You'll submit a consolidated pre-qualification for your fleet, detailing business structure, credit history, cash reserves, and anticipated routes. Mehmi Group then shops our 30 plus lender partners simultaneously and delivers a customized term sheet matrix. So you compare down payment requirements, interest rates, term lengths, payment schedules, and balloon obligations at a glance. Once you select your preferred structure, you sign a master agreement and upload documents in our secure portal: IDs, corporate financial statements, proof of income, insurance summaries, and equipment quotes. Underwriting typically takes 48 to 72 hours for multi unit deals, and our team coordinates directly with lenders to expedite follow up. Finally, funding occurs in tranches or lump sum depending on your negotiated agreement, and you take delivery of your new units while our support team helps with maintenance planning, insurance renewals, and refinancing strategy down the road. Tax advantages multiply with scale. You can claim capital cost allowance on each truck, Class 10 or 10.1, deduct interest expense, fuel maintenance and insurance across the fleet, and even home office expenses if you run dispatch centrally, document kilometers per unit, and consolidate receipts to maximize deductions. A sale leaseback can also free equity on older trucks, sell several units to a financier, and lease them back to inject working capital while retaining operational control. Community and mentorship remain vital. Join provincial trucking associations, attend fleet management workshops, and engage in online forums to share best practices on negotiating bulk parts, pricing, telematics, utilization, and load board optimization. That wraps up today's episode on scaling your fleet and financing multiple trucks for growth. To explore tailored multi unit financing solutions, visit memigroup.com. Fill out our fleet pre-qualification form, and one of our specialists will reach out within hours to guide you through customized term sheets designed for your growth trajectory. I'm Haider Malik. Thanks for listening, and here's to your fleet's success on the road.